Hello, good evening, everyone. Welcome to this session of beginner's journey to forex trading. I actually came in late because I was doing something. So let me just go because we just have less than 40 minutes to go. So I'll just walk you through the process of what we'll be discussing today, and I will be sharing my screen now so you guys can see. So let me share my screen. Um, okay, all right. This uh what we'll be going through. Same is the beginner's journey to forex trading. So I'm actually recording the video. So in case most of you want to go back to check how we explained everything, you can just go back and reflect with it. I'll post it on YouTube, on TikTok, on Instagram, and probably on X. So you can just go to watch it over and over again until you understand. So this is just part one. Tomorrow we'll be doing part two continuously until we finish the whole academic structure that we have. So today I'll just walk you through all the course outline that we'll be having. So here's the academic structure. One is the introduction to forex trading, where we'll be talking about forex basics and trading platforms. That's you are going to know everything about forex. What is forex? How do you trade forex? And the trading platform will be what you use to trade it. What application can you use? Because there are so many applications. So I'll walk you through that. Then we move to technical analysis. So under technical analysis, we have how to identify market structure. That's the way in which the market is. I know most of you will be seeing all those lines up and down like this, as if like wave. You wondering what all those things are. I will explain all of that. So we have how to mark out your zones using support and resistance, trend line, Fibonacci retracement, extension and extensions. So the third one will have learn how to enter and exit a trade. Under it, which you have the candlestick formation. That's how candlesticks form. We have chart patterns and price action. I'll explain all of this. Then we move ahead to risk management strategy, where we have risk to reward, risk to reward, then bracket 30 pip stop loss maximum. Then setting stop loss based on market structure. Also be explaining how to set stop loss, because most of you just set stop loss maybe based on like the money you want to risk, that kind of thing. But most how the professional way of setting stop loss is set it based on market structure. So we move to trading psychology tips, where we're developing a successful trading mindset. I think I will also show you a trading plan that you can follow so it will guide you. Then we also move to the fundamental analysis. Under it, we have learn how to trade news, e.g. the NFP, the CPI, and the FOMC. I'll also be explaining all of this on the as we go ahead. We'll go a live session. That's under the last part is backtesting and live analysis. So we'll be going live to trade live to see how everything works. So so I hope you guys understand this. So let's just move ahead so that we can cover up the time in which you have. Sorry, please let me just use this too. Let me use this too so it will be easier. So I want to use this editing tool. Yeah, this is what I'm looking for. So I'm going to edit. Okay, so now we move to introduction to Forex. So I'll just be reading for me and be explaining it because I've already set up everything, so it's easier for all of us. So now, introduction to Forex trading. Now, what is Forex trading? So I want to just make this simple for everyone. I know we have been hearing different types of trading. We actually have different types of trading. We have trading currencies, which are like trading like money, from different country. We have stocks like all these shares for company. We have options. We have cryptocurrency like Bitcoin, Ethereum, all of those this thing they have been hearing. So just to keep it simple, we're talking about forex because I believe that's what everyone is familiar about. So forex is actually it operates 24 hours a day and 5 days a week. That's from Monday to Friday. That's how forex That's how the market is open. So the market is only open for 24 hours every day from Monday to Friday. Saturday, Sunday, the market is not open for Forex. But for other markets like crypto, the market is open 24/7, sorry. So now what is Forex? What is Forex? So Forex is also called the foreign exchange market. It is a market where people exchange the currency of one country for the currency of another in order to do business internationally. I know you're seeing my screen, so it's easier for you to understand what I'm saying as I'm showing everything here. So as I said, Forex is also called the foreign exchange market. That means you're exchanging because it's a market where people buy and sell. Just like the way you go to a local market, you give your money to get something in return. But in this market, what we trade is currencies. That's the currency of a particular country with currency of another country, just business internationally. So now, for instance, let's say um, so as the example of this forex is, for instance, you are changing your euro to dollar, or you are changing your dollar to naira, or pounds to like any country, just their currency. If you are changing from one currency to another currency, you just traded forex. So that's just what forex is all about: exchanging one currency of a country to another country currency just to do business. So that's just all it is forex. Now, let's give an example. Let's say, for example, you live in Nigeria, because I'll be using my Nigerian people here. So I also give an example of other country again. So let's say you live in Nigeria and you travel down to the United States. Now, when you land in the United States, you will have to exchange your Nigerian naira to the United States dollar, because you cannot spend your naira in the United States. So you have to change that naira that you carried, which you traveled with, to US dollar, so you can be using the US dollar there, because you can't use naira in in the United States. So the process of you exchanging that your naira to dollar, you just traded forex. That's just all what forex is: exchanging one currency to the other. So now, how do we make this money? I know you'll be wondering, okay, if I'm exchanging one currency to the other currency, how then will I make money? I know that's the question all of you will be asking me. So now let's make it very simple for every one of us. Let's say you have 75,000 naira, and now that's you, as you're in Nigeria, you have 75,000 naira. After you have paid your flight, you have traveled to the United States. Now you land in the United States with 75,000 naira in your hand. Now you can't spend this 75,000 naira there in US. You have to convert it to dollar. So now the current exchange rate, I'm using 1.5 so that it's easier, the calculation will be easier. So the current exchange rate of $1 to naira is 1.5. You understand this? The exchange rate, if you are exchanging your dollar to naira, that's $1 to naira is 1.5. So now you have 75,000 naira. If you exchange your 75,000 naira to dollar, you are going to get, so how are we going to now you have 75,000 naira, which is this here, 75,000 naira. And now we know that the current exchange rate is here, which is $1 to naira is equals to 1.5. That's the exchange rate. You are converting dollar to naira is 1.5. And if 1.5, if you have 1.5, you're converting into dollar is $1. So now you have 75,000 naira. If you exchange your 75,000 naira to US dollar, what you're going to get is $50. Let me show you how to calculate it. Now you have 75,000 naira, which is just one circle there. So you're going to divide your 75,000 naira, 75,000 naira. You're going to divide it by 1.5, which is the current exchange rate. If the exchange rate increases, you also divide it or reduce it. You're going to divide it with that exchange rate. So now let's say the exchange rate is 1.5, which we're using for this example. Now you have your 75,000 naira, you divide it by 1.5, which is the exchange rate price. Now you're going to get $50. You can do the calculation to see 75,000 naira divided by 1.5. You're going to get 50. That 50 is the dollar, because you're converting it to dollar. Now, if you have that $50, if you convert your $50 to naira at the exchange rate of 1.5, you're going to get 75,000 naira. So you can just do the calculation in case you're confused, so you can get it properly as we move on to the video. So now, that exchange rate, which is how much $1 is equal to Nigeria Naira, is constantly changing as the value of this country as the value of this country currency fluctuates with the economy of this country. So let me explain what this means. Now, I told you the current exchange rate of dollar to naira is 1.5. So this exchange is constantly fluctuates based on the economic of this country. So if Nigeria is really doing good or really doing bad, the country currency is going to, like, it will have effect on the exchange rate. So if the US economy is doing really good, it will have an effect on the exchange rate. If it's doing really bad, it will have effect on the exchange rate. For any country, if, for instance, if Nigeria is doing really good, the economic of Nigeria will be strong, and the exchange rate also can also change. If Nigeria's economy is doing really bad, the exchange rate can also change. So now, let's say you didn't spend any money, because after you converted your 75,000 naira to dollar, you had $50 with you in the United States. Now, let's say you did not spend any money in the United States. That's your $50 is still with you. So you didn't spend any money. Now, the exchange rate increased from 1,500 naira to 2,000 naira. That is $1 to naira has become 2,000, meaning that the exchange rate increased from 1.5 to 2,000 naira. Before, the exchange rate was 1.5. Now, the exchange rate increased. I told you, exchange rate increases based on the economic of the country. If the economy of the country is doing good or is doing bad, the exchange rate can change. So now, the exchange rate increased from 1.5 to 2,000. That's $1 to naira is 2,000 naira. So now, and you didn't spend any money in the United States. I'm just trying to explain for you how we make this money in the forex market. So now, let's say you didn't spend any money in the United States, which your $50 is still with you. Now, if you come back to Nigeria and you exchange that your $50 to naira, you won't get the same 75,000 naira initially, because the exchanges have increased. So your money have to increase. If the exchange rate drop, your money will drop. But now the exchange rate have increased from 1.5 to 2,000 naira. Now, if you convert your $50 to the current exchange rate, you are going to have about 100,000 naira. So that's, you're going to say $50 times the current exchange, which is 2,000 naira. That's 50 times 2,000. You're going to get 100,000 naira back. That's what you're going to get. You're going to get 100,000 naira back. So you're not going to get the initial money you gave them when you're traveling. When you're exchanging your currency, you're going to get the current exchange rate price, which is 100,000 naira. And you just made a profit of 25,000 naira. You just made money. It's as simple as that. Exchanging your currency of one country with currency of another country to just do business internationally. So that's just what Forex is, exchanging one currency to the other. So that's how we make money. So if the exchange rate increases, your money increases. If the exchange rate drops, your money will also drop. So now, so thanks to technology, you don't have to go to the airport and exchange your money. You can do this with the press of a button on our phones. So I'm going to show you how to predict whether the price of a currency is going to go up or is going to go down. Again, I'm going to explain that, how to predict if the currency of country is going up or is going down. So now, if we go back to the academic structure, we have just done the forex base. That's just everything about forex. So now we're moving ahead to the trading platform. So I'll be explaining this for you guys in a short time now. So now there are only 3 platforms that you are going to need in this journey. With time you can bring in other things, but for now, this is the 3 platforms that we're going to use. Now, the first one is a broker. Now, what is a broker? A broker is a financial service company that provides a platform for users to access, that's for users, meaning traders, to access the forex market and execute trade. So brokers act as intermediaries between retail traders, that's me and you, and the broader global financial markets, which is the banks, the government, the hedge fund, the firms, etc. So this broker is where you will deposit your money to your account, to your trading account, and you'll be able to withdraw as well. So trading with a regulated broker help you ensure that your funds are protected. We are going to go deep on this later on, but just to explain this, sorry, just to explain this, So this broker is where you're going to be depositing your money. Now, if you want to trade, I told you you have to put money. You make money by putting money. So now we are going to deposit your money in this broker. Now the broker, what it allows you to do, it allows you to just it gives you the access to the forex market. Then uh okay, so let me just share my screen fast. Right. So let's move on to the next one. The second um platform we're going to be using is TradingView. I will be doing a live. I'll show you how everything is here. So TradingView, which is where we are going to be, we are going to go to reading our charts and understand when to buy. And okay, so then the third platform we're going to be using is MetaTrader 5, which is how we are going to be placing these trades and making this money. So let's go to introduction to TradingView, which is the second platform. I'll explain the first platform later, but let's just go to TradingView. Now, what I said here is I say go, sorry, right. And so let me just share my entire screen. Yeah, so okay, so we move ahead to TradingView. Let me do it on another platform so that yes, you can see everything. So we're going to go to google.com as I said here. I say go to your Google and type TradingView. So here's our Google. So just type in TradingView. You can see it just came out here. So we are going to search. Now, when you search, this is what you are going to see. The first one here, the first one, which is this. You can see this one, tap on your market. So this is what you're going to see. That's the first thing. So you're going to click on it. Now, when you click on it, it will open a page. Let's go to it. Open a page like this. So you can see, say click here, click on get started. Let me cycle it so you guys will see. So you can see, say click on get started. I don't like this pen. This much better. So you can see, click on get started. It's going to bring you to this place for sign up. So here's the get started. See it here. This is it. This one here. That's the get started. Okay. So let's go to TradingView and see. So this how the trading. So you can just it's actually showing me that should sign in. So I'll just cancel it and click on get started. So when you click on get started, now this is going to open this for you free until you are ready. Look whatever you want to look. You can see here it showed $0 forever. It's trying to tell you that TradingView is entirely free. You don't need to pay any money for you to use TradingView. It's totally free of charge. Guys, it's totally free. You don't need to pay any dime for it. So what you're going to click here, sign up. So this way you're going to click on. So you can actually sign up directly maybe with your Facebook account, your X account, with your Yahoo Mail account, your Apple account, with your LinkedIn account, or with Google, or you just create. If you want just create type in your email, type in your password, accept as I'm not a robot, and then you create. So this is just a simple step for you to do. Yeah. So you just create this and it's going to open a page for you like this. So let me just go directly. Okay. So so I said it's going to ask you for your email and password. You can create a username, just do all the stuff and just create an account. Now it's going to bring you to a page where you will see plan for every level of ambition. At the top you will see products. Click on it and then click on super chat. It's going to bring you to the chat. So now after you have signed in, if you sign in, save it open. So just come here, click on products. You can see product here. Okay, so here is products. You click on products. Now when you click on products, you're going to see super chat here. Okay, I already click on it, so it just open. Let me just go back. No, I click on it and it open one. So here is products. The moment you even hover on it, in case you're using Android phone, you're using button. In case you're using phone, if you click on it, you have to click on it. But since I'm using my laptop, I just need to hover on it, and you can see super chat. You can see um, the one terminal to rule them all. So you click on super chats. So the moment you click on super chat, it's going to open this page for you. Now this is how it will look like. So I wanted dropping a video separately on how to navigate through this, but I'll just do it very quickly. I'll just show you very quickly. Okay, now I know you'll be seeing a bunch of stuff. What is going on here? So to just easily navigate this, you're going to delete all these symbols here, everything here. You're going to delete it. So you just click on this delete icon here. So let me cycle it so you can see. Here, the delete icon will be here. So you can see it here. So you can just be deleting, just delete everything. Delete. Guys, just wipe everything here. So delete, delete. Yeah. Then you also come here. We are going to get rid away of this. I'm going to removing this. All this. It's not important for us. All this rubbish here. I'm going to get rid of them. So how to get rid of them is you just come here, under here, guys. Yeah, this icon here. This is how they're showing top. So you click on it. Now the moment you click on it, you just delete. You can see the delete icon. So everything's gone now. You see your charts clean and everywhere is looking good. But before I really go deep inside this explain, I'll do a separate video on this. Actually, I'll do a separate video on how to navigate trading view. I'll show you how to add the currency pairs you are going to be trading, how to trade it. I will really explain all of that. So let's just go back to what we have for the day. Okay, so I can see, I say I will drop a link to the video. So I actually drop a link to the video. So now let's just go ahead. Now, how to trade forex pair. Forex pair are two different currency compared side by side. Now, as you all know it, if you are exchanging your currency, your country currency with another currency, you're actually doing two things at the same time. Meaning that you're pairing two currency. You're pairing, for instance, let's use the example here. Euro USD. So I'll explain everything here. So forex pair are two different currency compared side by side. For example, EUR USD. You may not know what this means, but the first three letter is the first currency and the last three letter is the second currency. So now we have EUR, which is the first currency, the first three letter word is the first currency, and the USD is the second currency. So now by the right hand side, it will tell you what we are comparing right now. So it is the euro with the USD. That means this this first three letter EUR, it means it's the first currency, which is euro. Then the last three letters, which is USD, is the second currency which we are comparing with. That is the dollar. So the EUR stands for euro, while the USD stands for dollar. So another example is GBP USD. GBP USD. So it is the Great British Pound with the US dollar. So as I told you, you have to compare two forex pair side by side. That is, if you are comparing, for instance, United States dollar with Nigerian naira, you have to compare two. You can't just trade only one. Like you can't trade the US dollar alone. You can't trade naira alone. You have to compare them. It's like you compare euro with the Nigerian naira, US dollar with the Nigerian naira, or anyhow you want to compare them. But they have a format. I will also explain that later. So here we have another example, USD JPY. It is the US dollar with the Japanese yen. So we have another one, AUD USD, which is the Australian dollar with the US dollar. So we'll move on to Forex pair. So Forex pair. Forex pair are three letters. The first two is the name of the country, while the last letter is the country's currency. For example, is US. So USD. The US stands for United States, while the D stands for dollar. So here's a picture of it. You can see the US means United States, D means dollar. So USD, United States dollar. Other example include GBP. The G and P stands for Great Britain, while the P stands for pounds. That's the Great British pounds. Another example, we have the CAD. Now, the CAD, CA stands for Canada, while D stands for dollar, which is the Canadian dollar. Now, another example is JPY. JP stands for Japan, while the Y stands for yen, which is the Japanese yen. Now, the exception to this list is CHF. Now, CH stands for Confederatio Helvetica, while F stands for franc, which is the Swiss franc, and it is the name of the currency they use in Switzerland. So why this is actually different is because I think there are two major countries, or is it? Yeah, I think two major countries that came together to form Switzerland. So that's why they have exception to their own name. Another exception again is the EUR, which is the euro. So you can euro, actually the country that uses euro, there are many. So I think accumulation of all those countries which came together as one. That's why their own is also different. So you can try others and you see that that's how it actually is. For instance, so let's use Naira, the Nigerian Naira, for instance. So NG, which is Nigeria. NG stands for Nigeria, and then the last N, which is Naira, which is the Nigerian Naira. So we use Naira in Nigeria. So that's how it is. So here we have a note. It's a note. We have what is called the ISO. Now, the ISO stands for International Organization for Standardization. Now, these people are responsible for creating standardized codes such as the three-letter codes used to represent currency globally, like the USD, which stands for US dollar, and the EUR, which stands for euro. Same with so this ISO, which is the International Organization for Standardization, they are the people responsible for giving this code for each country. For instance, the NGN, which is Nigerian Naira, the USD, which is the United States dollar, the EUR, which is the euro, the GBP, which is the Great British pound, the CAD, which is Canadian dollar, the AUD, which is the Australian dollar, and so on and so forth. So these people are they are responsible. There are people responsible for giving this code so that it can be easy to identify and represent globally around the world. So now we move ahead to what is base and quote currency. Now we have two currencies. One is to the left and one is to the right. So for example, it's just this. Let me go up. For example, this. So these are two currencies. One is to the left, which is the EUR, and the other one is to the right, which is the USD. Same with this as well, the GBP, which is another country with USD. So that's just what this means. So one is to the left and the other is to the right. Now the first currency to the left is called your base currency, while the second to the right is called your quote currency. For example, EUR USD. Now the EUR, which is the euro, is your base currency, while the USD, which is to the right hand side, is called your quote currency. Now this is a picture of it. You can see EUR stands is euro, which is your base currency, while USD is your quote. So the always take note, the first currency is your base. It's your base currency. That if you're comparing to forex pair, the first currency is always your base currency, while the second currency is your quote currency. So now when you are trading when you are trading any currency pair, for example, Euro USD, what you are actually doing is you are saying that Euro is going to be stronger as at that particular time, and US dollar will be weak. Whereas when you are selling Euro USD, you are saying Euro is going to be weak and the US dollar is going to be strong. So let me explain this. Now, I told you in a forex pair, we compare two currencies. So we're trading one currency with another currency, just do business internationally. I'm just trying to recap what forex is. So now, here, what it's actually saying is when you are comparing two currency, for instance, the Euro USD, which is the example that is given here. Now, what you're actually trying to do is you are saying that Euro, that's which is your base currency, is going to be strong at that particular time, while the dollar, which you are comparing with, is going to be weak at that particular time. So, as I gave an example of when you travel to the United States, now the exchange rate then was 1.5 as what when you were traveling at that particular moment, the exchange rate was 1.5. Now, maybe the economy of Nigeria was not doing really good that time, so the exchange increased to 2,000 naira. So now what you are doing is what you are trying to say at that exchange, for you exchanging your currency to another currency, you are trying to say that okay, the base currency is going to be, so if you are buying the base currency, which is you, if you are buying it, you are saying you is going to be strong as at that particular time, while the other currency you are comparing with, which is the US dollar here, is going to be weak at that particular time. Same if you are selling. If you are selling the euro, you are actually saying that the euro is going to be weak at that particular time and the dollar is going to be strong at that particular time. So it's just like you're simply doing two things at the same time. Yeah, if you are buying, it means that you're, let's say, comparing euro USD here, it means that you are buying euro USD. That means you're saying euro USD is going to go up. The exchange rate is going to be strong. Why you're saying dollar exchange rate is going to be compared with the euro, with the euros. Same thing if you are doing USD NGN, that's the US dollar with the Nigerian Naira. You are saying that if you are buying the US dollar, you're saying that the US dollar is going to be strong as at that particular time they are buying, while the Naira will be weak as at that particular time. But if you are selling the dollar, that means you are saying that the dollar is going to be weak as at that particular time and the Naira is going to be strong as at that particular time. I don't know if you understand it, but you can still go ahead to you can still play the video again to understand it. So other examples now include the GBP USD. So GBP USD, this means you believe that the pound is going to be stronger and the US dollar will be weaker. So that means you are buying pounds and selling dollars. I told you are doing two things at the same time. So the example we gave here of the Euro USD, it means that you are buying, that's if you are buying. If you are buying, you are simply saying that the Euro is going to be strong while the dollar is going to be weak. That means you are buying and selling US dollar at the same time. At the same time, that's what it simply means. So here another example is the USD JPY. Now, this means you believe that the US dollar will be stronger and the Japanese yen, which is JPY, will be weaker. So you are buying dollar and selling yen. So you can, if you are selling, for instance, this GBP USD, if you are selling GBP USD, what you are simply saying is you are the GBP, which is Great British Pound, is going to get weak as at that particular time, while the US dollar is going to be strong as at that particular time. So same thing with all this. So you can compare other currency to so you can understand it. So now we move to guys. I think it's already time, so we'll stop here. We'll stop here. We'll come back. We'll continue from here tomorrow.